Sound of a slow, steady heartbeat in the background. 4 a.m., New York time. The city that never sleeps is actually dead quiet. The concrete canyons of Manhattan are empty, but on your screen, the war has already begun. Most of the world is unconscious. They are dreaming of success, dreaming of money, dreaming of freedom. But you are not dreaming. You are awake. You are hunting. Welcome back to the podcast. Today we are talking about the algorithmic kill switch, that specific window of time where the market reveals its true hand and where most retail traders get slaughtered because they are still looking at support and resistance lines from yesterday. If you are struggling to find consistency, if you feel like the market waits for you to enter just to reverse, listen closely. We're going to dismantle the 4 a.m. hour. We're going to talk about why time is more important than price. And we're going to fix your mindset so you can stop chasing the candles and start anticipating the delivery. Let me paint a picture for you. I want you to remember the last time you traded the London session. Maybe you set your alarm for 2 a.m. You dragged yourself out of bed, eyes burning, coffee in hand. You sit down and you see price moving. It's moving fast. Big green candles. It looks like a breakout. The adrenaline hits you. You think, this is it. This is the move. You buy. You don't wait for the retracement. You don't check the higher time frame PD array. You just buy because you're afraid to miss out. You're afraid that if you don't click that button now, all that lost sleep will be for nothing. So you execute. You are filled, and for 10 minutes, you feel like a genius. Price pushes up another 5 handles. You are green. You are mentally spending that money. And then, 4 a.m. hits. The hour changes. And suddenly, the candles stop printing green. They stall. They wick out. And then a heavy displacement candle down. It erases your profit. It taps your entry. You hold, hoping it's just a pullback. It's not a pullback. It's a reversal. You just became liquidity. You just funded the smart money's move for the rest of the day. Why? Because you didn't understand the kill switch. You didn't understand that the algorithm has a schedule and it does not care about your sleep deprivation. Breathe. Let that sink in. We have all been there. The pain of waking up early just to lose money is a specific kind of pain. It feels personal, but it's not personal. It's structural. It is simply the algorithm doing what it was programmed to do. Here's the core truth you need to accept today. Time dictates price, not the other way around. In the world of smart money concepts, we know that price isn't random. It's engineered, and it is engineered on a timetable. The 4 a.m. hour, specifically that window deep into the London session, is often where the Judas swing has completed its work and the true expansion begins. Or it is the moment where the initial manipulation ends and the market shows its hand for the New York setup to come. Lesson number 1. The algorithm seeks liquidity before it seeks expansion. Before 4 a.m., the market is often building a trap. It is inducing traders to go long at the high or short at the low. If you are entering trades without seeing a clear rate on liquidity first, you are the liquidity. Ask yourself, has the Asian high been taken? Has the Asian low been swept? If the answer is no, sit on your hands. Sit on your hands. I know it's hard. You want action, but professionals are not paid for action. They are paid for patience. The 4 a.m. candle often acts as a pivot. It checks the work of the previous 2 hours. Did we grab the stops? Yes? Okay, now engage the kill switch. Now we move toward the real draw on liquidity. Lesson number 2, the power of the high or low of the day. Often in a classic London expansion model, the high or low of the day is formed right inside this kill zone. If you are bearish and you see price rallying hard into a higher time frame, point of interest, maybe a bearish order block or a fair value gap on the 1-hour chart, and it is 3:45 a.m., 3:50 a.m. Watch out. That rally isn't a breakout. It's a return to premium. It is price getting expensive so the smart money can sell it to you at a high price before dropping it. The 4 a.m. kill switch is often the moment that premium pricing is rejected. If you are buying there, you are buying the very top. You need to flip your mindset. Do not chase the green candle. Fear the green candle that arrives at a resistance array during a kill zone. Lesson number 3. Displacement is your only confirmation. We do not guess. We do not predict. We align. What does alignment look like? It looks like a heavy, energetic move away from a level. We call this displacement. If the 4 a.m. hour starts and price just drifts, that is not it. We want to see the algorithm wake up. We want to see a fair value gap created. That gap is the footprint. It is the evidence that money has entered the market. Think of the fair value gap as a signature. The algorithm signed the chart and said, "We are going this way." Your job is not to be the first one in. Your job is to wait for price to come back to that signature, respect it, and then join the move. That requires you to suppress your ego. You have to be okay with missing the bottom tick or the top tick. We don't want the top. We want the meat of the move. We want the easy part. Let's talk about the mental game here. Trading the 4 a.m. slot is grueling. You are fighting your biology. Your body wants sleep. Your brain is foggy. This is why your process must be robotic. You cannot rely on willpower at 4 a.m. You need a checklist, a strict binary checklist. Here is a visualization for you. Close your eyes for a second. Imagine you are a sniper. You are lying in the tall grass. You have been there for 3 hours. Nothing has moved. Your legs are cramping. You are tired. Suddenly, a target appears. An amateur would shoot immediately, but you check the wind. You check the distance. You check your breath. You wait for the target to stop moving. That is the 4 a.m. setup. The market provides the target. The time of day is your wind check. The PD array is your distance. And your risk management, that is your breath. You only pull the trigger when everything aligns. If it doesn't align, you don't shoot. You just watch, and you go back to sleep. That is discipline. Most of you are treating trading like a slot machine. You pull the lever and hope. I want you to treat it like a business of probability. If you take a loss at 4 a.m., what do? Do you revenge trade at 4:15? Do you double your size? No. You have a reset protocol. Here is your reset protocol for the London session. Step 1. If you take a loss, stand up. Physically stand up from your desk. Break the state. The screen is a hypnosis device. Break the spell. Step 2. Drink water. Rehydrate your brain. Step 3. Ask yourself, did I follow my model? If the answer is yes and you lost, that is just the cost of doing business. It is a business expense. Accept it. If the answer is no, if you broke your rules, then you are done. Session over. You do not earn the right to trade again today. You have to earn your seat at this table. The market will be there tomorrow. The 4 a.m. Killswitch happens every single day, 5 days a week. There is an infinite stream of opportunities, but you have a finite amount of mental capital. Protect your mindset more than you protect your account balance. You can make money back. You cannot make your confidence back easily once it is shattered. Now, I want to give you a challenge for tomorrow morning or whenever you next trade this session. I want you to show up at the charts 30 minutes before the 4 a.m. hour, so 3:30 a.m. New York time. I want you to mark out the Asian high and the Asian low. Mark out the midnight opening price, and then I want you to do nothing. Your challenge is to watch the 4 a.m. candle open and see if it raids one of those liquidity pools. Do not trade the raid. Just watch it. Watch how price reacts after taking the liquidity. Does it displace back into the range? Does it leave a fair value gap? I want you to journal that behavior. Prove to yourself that the algorithm is real. Prove to yourself that the setup repeats. Data over emotion. Collect the data first. Execute later. This is how you build trust. You don't build trust by winning lucky trades. You build trust by predicting price action without money on the line, seeing it happen, and realizing, I can see the matrix. Once you see it, you can't unsee it. The 4 a.m. Killswitch is not a monster. It is a machine. It has gears. It has levers. It has a schedule. Learn the schedule, and you stop being the victim. You become the operator. Stay focused. Stay disciplined. Don't chase the move. Let the move come to your level. And remember, if you control your mind, the market creates your wealth. But if the market controls your mind, it will take everything. Sleep well, traders. I'll see you in the next one.